Those of you joining us for the first time, my name is Jan. I'm one of the co-founders of Toggle, and this is the daily video insight where we take one of the insights produced by Toggle across thousands of US stocks and take a deeper dive, take a look at what the drivers are, what the direction is, and what it likely means for the stock price. If you'd like to see more of these, sign up for our YouTube channel alerts, or check us out on toggle.global, where you can actually also test drive Toggle yourself and see whether or not that might be a way to supercharge your investment process. Now, the focus today is going to be on Live Nation Entertainment, a company that probably many of you know as an organizer of concerts, reseller of tickets, and so on. And the focus will be specifically on the recent bullish pressure that Toggle has identified after two previous ones. This one is stemming from seasonality, effectively uncovering that over the following 3 months, historically, there has been some positive drift to the Live Nation stock price. As you can see here, the target would be around 90 with the entry point of 81.78, and the total rise expected is about just over 10% over the following 3 months horizon. Now, to look at the insight, you can just click on the card down here, which takes you directly into the analysis that Toggle had produced. And looking at the details, you can see that, again, the entry point here is 81.78, suggesting that it could reach possibly much, much sooner than just within the next 3 months. The target level, and that actually historically it's also often exceeded that threshold. Now, Toggle has analyzed 15 similar occasions to find out this conclusion, and what we want to highlight as well is that if the price were to instead dip below 77.67, the goal is to reevaluate the thesis or potentially put your stop loss here, because protecting the downside is just as important as looking out for the upside. Now, why it might move, as we already mentioned, this is basically based on the seasonality over the past 15 years, and the past performance gives us a good sense of the distribution of outcomes. And as you can see, most of the past outcomes were very much squarely at 10% or even above. There were some that were above 20%, but there were some that were almost negative 20%. So again, it really highlights the importance of sticking with a stop loss. And if the price action deviates far from the confidence interval highlighted above, in particular, if it breaks through this level but also below the red line, the time is ripe to get out and reevaluate the thesis. Now, in the daily brief today, we also discuss a number of interesting market relevant events. If you have it already, if you subscribe to it, it should be in your mailbox. If you don't, you can go to toggle.global and sign up there. Thanks again for your attention, and we'll see you again tomorrow.